moving averages. I'm going to cover them. A simple moving average is basically the average price of a stock over a period of time. So if you see a simple moving average written as MA or SMA 200 or MA SMA of 50, it simply means it's over a 200 or a 50-day period respectively. Now people use the averages to gauge the direction of a stock, and the longer the period of time for a moving average, then the more flat the line is going to be. So if we look at this picture here, we can see that there's a 200-day moving average represented by a red line and a 50-day moving average presented by a blue line. And the red line is fairly straight. It goes from, it's hovering around about the $8.50 range, but the blue line ranges as high as $10 to as low as $7. And as we can look at the chart of the stock that's depicted in a candlestick chart formation, which we'll cover those in another video, the blue line is more similar to the actual chart or the direction of the stock. So investors use this for resistance and support, which we actually covered in another video under using Taser as an example. And as we can see that the stock price, it goes down, it kind of levels off, goes down a little bit more. And if we look at the 50-day moving average, it starts high and it comes down and then it levels off. So if we see that the 50-day crosses over the 200-day, then the stock is actually in a bearish trend. And usually you can use any variation of the moving averages, but just know that you want to that the shorter time period is going to look more and more like the stock. So if we used a moving average of 10 days, then it would look even more like the stock than the 50-day. And investors like to use the shorter time span as a gauge with the longer time span. So if the shorter period SMA crosses a longer SMA period, then it can depict a trend the way the stock is going. Now some investors that are looking for more short-term trading abilities, they'll use maybe like a 50 and a 10-day. But if you're looking for a long-term opportunities, then the 50 and the 200 seems to be the standard amongst investors. And as we look on this chart here, the 50-day crossed under the 200-day, and even though that the stock was already on a decline, we can see that the stock dropped tremendously even more. Now the stock actually had a gap up, which we covered in another video using Walgreens as well as Office Depot and Staples. We can see that the 50-day kind of leveled off here, and it may start to go back up and cross back over the 200-day SMA if the stock continues to go up. Now, a lot of investors will see, okay, if the stock has changed directions, if it's going up or now it's going down, let's look at the SMAs and see if the shorter one will cross over the longer one. Because if it does, then it's a good signal that the stock price will continue to increase or decrease. Now, with this, we can also see that the 50-day is used as a support level, and once it's a support at about $7.08, we can see that the stock actually came back down, dropped, and bounced off of that support level. So these are ways that investors use simple moving averages to gauge the direction of a stock, as well as use them for support and resistance to see the price point for a stock to buy and exit. So now that we can see that the 200-day SMA is at $8.50, we can use that as a gauge as a potential maximum that the stock could go to, and it may reverse back, or if it breaks through, it'll continue to go up. But that's when you'll use the 50-day SMA crossing back over the 200 as a gauge to see if it will continue to go. We'll cover other technical indicators that can aid in this process, such as the MACD, and there are also others like RSI as well, which is Relative Strength Index. And we'll just cover those in other videos, but all of these can be used collectively to see when a stock is going to go up, go down, as well as when to buy in and sell.
I came so close to the edge.